Hi there. If you have been wondering, what am I going to do if I've been laid off and I can't make my mortgage payment, then you're going to want to watch today's video. Hi, my name is Carrie Ann Elliott Prey. I am with Team Home Match Northwest right here in the beautiful Pacific Northwest. And we have a lovely view with our guest here, Dan Keller. And Dan Keller has been one of my go-to mortgage guys, like the go-to mortgage guy for me. And he's going to talk with us today about what to do if you can't make your mortgage payment. So Dan, why don't I give you a brief intro there, but why don't you tell us a little bit about what you do and who you are?
Yeah, well, good morning, Carrie Ann. Thanks for having me. And it's always an honor. I've been able to sit in on a couple of these Zoom calls, these webinars with some of the top agents in this area. So it's always an honor when someone like you leans on us for advice. It's crazy times. I mean, we're right smack dab end of April. So we'll put a date on this. So what is it? The 28th of April.
Yeah.
Yeah. And I'm dating this just simply because I think it's relevant to our message today. It is, we're right in the middle of COVID, and as a mortgage professional, I'm a branch manager, so I'm overseeing about 13 employees. So I'm facing kind of a couple different battles here. One, I'm running a business. Two, I'm serving my real estate professionals like you. And then three, I have clients. I have home buyers and homeowner clients. And so we're seeing everything right now. And I think that's what we're going to get to today. But there's a lot going on. There's a lot of news that you, as a homeowner and a home buyer, need to understand relative to the market. So I'm excited to be here, Carrie Ann.
Yeah, well, thank you so much for joining us. I think it's really important for us to get some information out there. I know that people are, the information's, it's coming fast. You and I were talking about that a little bit before we came on. The decisions are being made very fast from the government, from economists. The information's coming fast. So I feel like for myself, and I'm feeling for my clients as well, that they're not knowing what to do and having to make some pretty major decisions here in a short time frame. So I wanted to chat with you a little bit. You have been putting out some information about forbearance, which is one of the options I think that there are if you can't make your mortgage payment. So I wanted to talk with you a little bit. If you're in that place and you can't make your mortgage payment, what are your thoughts? What are the options that people have if they can't make their mortgage payment?
Yeah. Well, I think you just said it so perfectly. If you cannot make your mortgage payment. Mm-hmm. See, so many people right now, because the government said, hey, and the government, and again, taking no political side here, but the government did come in right away on this. Like right when they saw that this was going to be an issue with COVID, impacting Americans and us being on our stay-home orders, they came in and said, hey, listen, we're going to initiate a forbearance plan to kind of ease the burden in regards to making your mortgage payments. Now, what you said is different from what's actually happening right now. People are thinking that it's a freebie. So I'm spending a lot of my time right now going, don't fall for this trap. Professionals like me and you, Carrie Ann, that were around in 2008 and 2009, we saw this same thing with loan modifications, with short sales. Oh, just miss a mortgage payment and then you can apply for a loan modification or a short sell.
Right.
And then you know what happened, 4, 5, 6, 7 months, the person ends up having to sell their home or loses their home. And so what I'm seeing right now with mortgage statements, I'm getting phone calls from clients, but even as far as you're getting letters, spam letters in the mail saying, hey, the government's granted you 3 months forbearance. No, they have, because they've made it known that no lender, no servicer can say no to this. So you are granted 3 months forbearance, but the fine print is what's killing people. The fine print states that you must pay those 3 months missed mortgage payments back on that 4th month. Okay, so here's my advice to clients right now. Don't fall for it. I think the government did a great job implementing something, but they've done a poor job telling servicers and lenders how to present this to consumers. Unless you've been diagnosed with COVID, or unless you are completely unemployed and bringing in no money, and in 3 months you're still unemployed, you probably will not get approved for the forbearance program that's being pitched to all of us. So if you can make your mortgage payment, this is my message to everyone, friends, family members. I have family members, my dad, and if he watches this, I don't think he'll be upset with me sharing this. But my dad calls me the other day and he says, "Hey Dan, I got everything. How you doing, Dad?" And he goes, "Good, good, good. I got everything set up for my forbearance." And I was like, "Dad, you're on Social Security. You're collecting a pension. You're making more money now than you made when you were raising me 20 years ago. What are you doing?" Well, he goes, "I get 3 months of forbearance." And I said, "No, you don't." So I
Oh.
had to walk him through that. And
Mhm.
he's an 800 credit score guy. He's owned his home for 20 years. It would have trashed his credit had he missed 3 mortgage payments because he's not impacted by COVID. Okay, so that's my biggest message right now, Carrie Ann, is if you have been ill, if you've come down with COVID and you've been out of work as a result of your employer laying you off or being ill, you may have a case. But if you can make your mortgage payment, make your mortgage payment.
Yeah. And I think that that's one of the other major differences between the recession. You mentioned the recession from 2008, is that almost every single one of us has a friend, a family member,
Yep.
someone that we're close to that is being heavily affected
Yeah.
by this, whether they're a business owner or your dad, or they've gotten ill. So I appreciate you sharing that with us. And I think your dad
Yep.
will too.
Yeah.
Because
Yep.
it's like you want to get that information out to your loved ones so that they don't make a mistake.
Yep.
I was curious, are the different servicers handling things differently? Are some of them giving you other options? Should you be wary of that if you hear that, "Oh no, it's fine, don't worry about it"?
Yeah. So, I mean, I've looked at about 7 or 8 now, including my company and previous companies that I'm with, just big names. All your listeners and viewers have heard of these names
Yeah.
from the top banks in the country, Bank of America, Chase. I've read all of their mortgage statements or forbearance letters, and all of them are ambiguous. All of them say the same thing. It's government legal templated jargon, if you will. So some of them, at the end of the day, if you understand how to read these, at the end of the day, you're going to have to formally apply. This is just by missing your 3 months or going into a 3-month forbearance. That doesn't mean you're approved for anything. That means you're able for the next 3 months to not make a mortgage payment, and it will not impact your credit. It will not, initiate the foreclosure process. That's what it says in the fine print. I've
Right.
already seen 2 credit reports, and I'll name the bank because I think it's important to know this. U.S. Bank has already, I've seen this on social media, reported 30-day lates on clients of theirs and on mortgages that are in forbearance. And so it's too soon. It's April 27th,
Right.
28th, right? It's too
Yeah.
soon. Come May and June, I'm curious to see how many people are watching this that maybe went into forbearance, that check their credit score on Credit Karma or have a lender pull it and see a 30-day late. But what I'm seeing right now is that it's too soon in the process. A lot of the servicers and lenders don't have a set program to follow. They're told right now that they can't report them to the credit bureaus. A 30-day late's a 30-day late. And I think that's how a lot of lenders are reporting these right now. The other part of it, what they're doing is they're reporting it as a natural disaster. They're kind of like when it was down in Houston a couple of years ago, right? A lot of homeowners missed their mortgage payment, and they were allowed to miss their mortgage payment because their homes were trashed.
Right.
Well, there was an asterisk under when they were 30 days late or 90 days late on their credit report, that it fell under a natural disaster program. It's
Right.
still a late. It still impacts your ability to get credit. So
Right.
be cautious of that. In 90 days, you will have to apply for a formal forbearance program, like a short sale back in 2008, like a loan modification.
Mhm.
And you and I were there. Those application processes are not easy. You have to paper trail. I mean, you're going to have to show without a doubt that you were impacted by this, or decline, move on to the next person, and the banks don't care. At the end of the day, they've got your collateral, which is your house.
Yeah. And that brings up 2 points to mind. As you were talking, you and I were talking about the CARES Act, and that's really what has kind of started all of this. It's what the government put into place right as we were really kind of experiencing the crisis, the virus. So I anticipate that there will be a lot of changes as we go, because we're really kind of just at the tip of the iceberg right now. We're just starting to see the financial effects. So I anticipate, I'm sure you do as well, that the CARES Act and some of the pieces of the CARES Act will change quite a bit.
Yeah, and that's what's scary about this. It's too early in the process, right? And that CARES Act was written so quickly and presented to us so fast. And so it's really important, if you're a homeowner, if you're a home buyer, to check in, to follow people like Carrie Ann and myself. It's our job. You sell homes on a daily basis. I fund mortgages on a daily basis, but really the majority of my job is making sure I can take information and interpret it properly, data properly, and give it to my clients to help them make not only a smart decision now, but help them even manage the mortgage that they have. So a lot's going to come out here in the next month or two. So I think it's just, stay tuned, follow up with Carrie Ann, and I think we'll get you the best information as fast as we can.
I think it'll be interesting to see if any other options come up. And the other thing that came up while we were talking was scams. Be sure that you're watching out for scams. As Dan mentioned, whenever you're having some sort of modification to your mortgage, there's paperwork there. It is not a simple, easy peasy process. So if you have someone who's reaching out to you and saying, yeah, I'll get this taken care of for you, I'll get it wiped out, and it's too easy, then it's probably too good to be true. I tell my clients that a lot. In real estate, if it's too good to be true, it probably is.
Yeah, be really careful. Only deal with your bank, your mortgage company. Only deal in regards to missing a mortgage payment. Right. I do want to say this because I have gotten maybe some negative feedback on this, because I've kind of taken a stance on social media. Make your mortgage payment. Just make your mortgage payment. If you take advantage of this, one, it's going to hurt you. It's going to hurt your credit. It's going to hurt you financially. It's going to put your home in jeopardy. But fourth of all, it's going to hurt the real estate economy and the mortgage world. And here's why. Servicers still have to make their payments to their investors. So if you don't make your mortgage payment, the servicer or the bank that you have to make your mortgage payment to is still having to pay investors. If they are unable to pay investors, that's going to cause a huge ripple effect in the mortgage industry. What it's going to do is liquidity is going to dry up. Mortgage companies are going to go out of business. When mortgage companies go out of business, they're going to tighten mortgage qualifying guidelines. You've already seen this with Chase Bank and Wells Fargo. They came out and made a huge stance in the last 2 weeks. If you don't have a 720 or 700 credit score and 20% down, period, they will not originate a loan for you. That's crazy. Well, if this trend of forbearance keeps going and banks and lenders go out of business, that's going to be the general rule of thumb all the way around. And you and I know this, that over 50% of my business is 60% of my business is less than 20% down. So if you take away 2/3 of our business, that's going to constrict the housing market. When you constrict the housing market, home values drop, and it's going to cause a massive negative impact on both mortgage and real estate. So just be cautious of that. If you can make your mortgage payment, make it. Now, I want to switch gears and be super empathetic, or I guess it would be sympathetic, right? Listen, if you are in a bad situation right now, if you've become ill, or if maybe you have a 2-income household and both of you have been laid off or furloughed, and you're in a bad position, this is serious for you. Make sure you gather the right information. You're paper trailing everything. Reach out to your servicer right now and let them know. Okay. And then this is where you want to stay in touch with Carrie Ann, because there is an option. Let's say 2, 3, 4 months down the road, this doesn't work out and you haven't recovered like you thought you would. You can always sell your home. That's what's different today than in 2008. In 2008, you were losing your home. Now Carrie Ann can help you get out from under your home, maybe put some cash in your pocket, maybe go rent for a year until you get your feet back, on the ground. So just, I take a hard stance, like, don't take advantage of this. But if you are in a position where you're truly in trouble, there are options there for you, but make sure you're leaning on a professional like Carrie Ann for that.
Yeah, that's a really good point. There's such a huge difference from this and 2008, the housing market. This is a good time to talk a little bit about stats. I was taking a look at the stats from the time that we were issued the Stay Home, Stay Healthy order, which was 33 days ago, if you can believe it.
Wow.
It seems like much longer. But the homes that were priced under $500,000 are selling in an average of 18 days. That's an incredible seller's market still, so fast. And sellers are getting 102% of their asking price in those 18 days.
Wow.
We still only have 1.4 months of inventory under 500. So that means if nothing else got listed, it would only take us under a month and a half to sell through everything, under 6 weeks. So if you need to sell your home, especially in that under 500,000 price point in Snohomish County, it is still an extremely hot seller's market. We're still seeing multiple offers. Our last listing received four offers the first day. And even the properties that are over 500, our average days on market are 30, and they're still receiving almost exactly 100% of list price to sales price ratio. So in 2008, that wasn't the case. I had a point of time during the recession where I was doing a market analysis for a bank, actually, for a foreclosure. And there were 24 months of inventory, 2 years worth of inventory on the market. We're nowhere near any of that. So if you ultimately decide that forbearance isn't going to work, and you're in a difficult place, selling your home is definitely an option right now, and a pretty good one. You could probably walk away with some decent equity. Most people can. So, so thanks for bringing that up. The other thing that I was thinking about while we were chatting was landlords. I'm going to be interested to see if the CARES Act morphs and changes. There's a moratorium on evictions for both the banks for foreclosures and for tenants if tenants don't pay their mortgages. So that's going to put some pressure on landlords. It'll be interesting to see if the CARES Act starts to kind of come in and take care of landlords as well. I have a lot of investor clients that are wondering about that.
Well, I think a couple of things that I know the administration that's in the office right now is a really real estate friendly administration. Okay.
True.
So we have that. The other thing is we have a robust housing market. And I think everyone knows from the top down that investors play a big role into that. So I don't want to speculate anything. I'm not here to talk necessarily about that. I think both of us, as we gather info, should come back and really give your listeners some information on that for your investor clients. And I know you're an investor too, Carrie Ann, so this is super, super relevant for you. But I have a feeling, much like the government's come in and put a bunch of money into businesses to kind of keep them, going and help them get through this, I think investors are going to be a part of that as well. So, but it's, again, too soon. Right now, I think today is the biggest message is for homeowners. If you find yourself in a tough position, one, try to grind it out if you can. Two, if you can't, lean on someone like myself or Carrie Ann for some advice, and we're here to help.
Yeah, absolutely. And watch out for scams. Can't say that enough. So, all right, Dan, well, thank you so much for joining me today, answering questions about a very important and sometimes scary topic for people. So I really appreciate your insights, and hopefully we'll get together soon and talk about some more real estate advice.
That would be awesome. Thanks for having me, Carrie Ann.
Thank you. Bye.